Hey, I'm Sergio Hembrom, an accounting teacher. Today I'll be discussing the basic of accounting. So this video will be helpful for those who are willing to take in near future accounting for their studies. So without delay, let's start. Introduction of accounting. So under this, I'll be discussing on what is accounting, accounting concept, objectives of accounting, the importance of accounting, and the last one is advantages of accounting. So now let's discuss one by one. What is accounting? So now the definition says accounting is the way of recording, analyzing, classification, summarizing and presenting the financial transaction of a business. So it's very easy to understand, but there are a few important words which we have to understand really very properly. So first one is recording, analyzing, classification, summarizing, presenting, transaction, financial, or the business. So if these words are clear, so it's very easy to understand the definitions of accounting. So let me read out once again. Accounting is the way of recording, analyzing, classification, summarizing and presenting the financial transaction of a business. Now the key points that we found in the definitions are transaction, recording, analyzing, summarizing, presenting. The last one is financial. Now let's see one by one. Transaction means exchange of interest between the parties. So there has to be two parties to exchange. One will receive and the other one will give. The next one is recording. So in accounting, there is a system which is followed by everyone. It's called a double entry system. So I'll be talking in other videos about this particular system. The next is classification or analyzing. Now analyzing or classification means we have to put the transaction or whatever we have recorded in the journal in the proper place. So for this we have to post or we have to correspond in the ledger. Now summarizing. So after putting in the ledger we have to summarize in the trial balance. That means each transaction has to be put in the proper way. So for this we have to prepare the trial balance. The next is presenting. So after doing the trial balance we have to present our transaction, like how much profit the company is making or how much loss the company is making. Even through making a financial statement, one company can come to know about his asset and liability. The last one that we have to understand is a financial. So the financial means exactly money. So here it's explained very nicely. Anything which can be measured in terms of money, we can say it's a financial. Now let me talk about the concept of accounting. So there are many concepts, but I have divided the concept into three parts, and these are the very important parts of the accounting concept. The first is double entry concept, the second is separate entity concept, the last one is limited liability concept. Now as I told, the double entry concept I will be discussing in other videos, but for now double entry concept means it's a transaction have two effects and we have to record them both. For example, there will be a debit and a credit, and this both the transaction we have to record it in the books of account. Now next is separate entity concept. Separate means we cannot mix business owner and the business together. So business is something which is artificial person and the owner is the real person. Now as explained is given here, business has its own entity separate from owner. See, business is an artificial legal person. So this is very important to understand the concept of separate entity. Now limited liability concept. The liability of owner is limited up to level his or her investment. That means each owner has his own limitation for the investment, up to which he can invest his money for the product or not. Now there are a few objectives which are very important or the purpose of accounting. So let's see one by one. The first is identification and recording of transaction, preparing profit and loss statement, preparing balance sheet, keeping records of cash transactions. So this 1 2 3 4, these all the things comes under the double entry system, so for which I'll be making separate videos. The Other objectives are evaluate and control assets liabilities, the preventing money defalcation and cost, detection and prevention of errors, so detection and prevention of fraudulence, property and cost audit. And the last one is management, income tax, and social audit. So these are the main objectives of accounting. So apart from this, there are also many objectives of accounting, but these are the main objectives of accounting. Now let's see the importance of accounting. So why the accounting is done? Why it is so important for the business? So it is important because it's help for making plan of a business, or it helps for making budget. It helps in the banks, or it helps for the lenders in the banks. It helps to keep records of the transaction. It helps for the business for decision making. It helps for the investor to get proper information for on particular business on which they're about to invest. It helps for reporting profits, managing and monitoring cash flow. Now let's see advantages of accounting. Why accounting is so advantage for the business? So the first is it's a complete and systematic record. So as I told you, there is a record, there is a system which is called double entry system. It's really a complete and systematic way of record. It's a kind of scientific way of recording transactions in a business. Determination of selling price, valuation of a business, helps in raising loan, evidence in court of law, in compliance of law, interfirm or intra-firm comparison, facilitates audits, and the last one is effective management. So these all are very important, or we can say the advantage of accounting through which the company can determine for selling price. So what will be the selling price, or what will be the valuation of the business if someone wants to invest on particular business, a particular company. So these are the advantages of accounting. That's for today. Thank you for watching.